Hi, Todd here, managing member of the ZINC Income Fund. Most people think their IRA or 401k can only be invested in stocks, bonds, or mutual funds, but that's not the full picture. With a self-directed IRA or SDIRA, you have much more control over where your retirement savings go. And one of the fastest growing asset classes inside these accounts is real estate, hard assets, specifically real estate-backed loans, also called mortgage notes at times. So why are real estate loans topping the list for people that do self-directed IRAs? It comes down to three main reasons: predictable income, protection of principal, and diversification. Let's talk about predictable income. Unlike the stock market, which I have been in at times, which can easily swing wildly day to day, I call it emotional exuberance. Real estate loans pay a fixed interest amount over the life of the loan every single day. Investors receive regular payments monthly, ACH'd directly to their account. Given the steady cash flow, this reoccurring income is especially important for retirement accounts, where consistent, reliable distributions can supplement living expenses without risking principal. Second, let's talk about principal protection. When you invest in a first position mortgage loan or a first position deed of trust, your investment is 100% secured by the actual property, a tangible asset that holds value that you and I can get in my pickup truck and go drive to and see and touch and feel. If that borrower defaults, we have the legal right to recover that property typically in about 90 days. And in our case, we do it even sooner. We can sell it, recoup our investment, and this protective equity acts as a buffer, lowering the risk compared to owning equity stocks or in a property or investing in stocks that can fluctuate dramatically. Third, let's talk about diversification. Many investors have their retirement money stuck in public markets, exposed to the ups and downs of the economy, stock market, or whatever side of the bed one of our federal officials wakes up on and gives us news on CNN. The stock market trends can fluctuate drastically based on emotion. A self-directed IRA lets you move outside those markets that are fluctuating into alternatives like real estate loans. This diversification helps reduce the risk by spreading exposure across different asset classes. At ZINC, we work with many investors, a lot of them, who use their self-directed IRAs to fund mortgage loans and secured through real estate, passively earning distributions every single month. This approach appeals to those seeking reliable income without the hassles of property management and ownership. You don't have to deal with tenant issues, you don't have to deal with repairs or even vacancies. Instead, you earn interest payments every single month, ACH'd directly to your account. With an experienced team of managers right here in Fresno, California, we monitor the loans, we monitor the risk, and we've done $1 billion of this over the last 20 years. There's also some amazing tax advantages I'd like to share with you. Because self-directed IRAs are tax-advantaged accounts, the income earned from these grows tax-deferred, sometimes even tax-free, depending on your account type. This means you keep more of your returns compounding over time, helping you build wealth and legacy more efficiently than in other vehicles. If you're wondering about the liquidity, many investors appreciate the mortgage fund, which is what we operate. Our loans typically have defined terms of between 9 and 12 months, giving you a clearer timeline of when your capital will be returned to you if you so desire it. Unlike some real estate investments, when you own it, it can be tied up for years and years. Very hard to manage. We've been in business for nearly 20 years. Disciplined underwriting, disciplined processing, and disciplined servicing, all right here. Disciplined loan portfolio with active management that have resulted in zero principal losses to any investor in our fund since inception, which is a record that I'm personally very, very proud of. A track record that speaks volumes in today's market. Many people who are nearing retirement, I spoke with one of our investors yesterday, or who manage trusts or real estate, find our approach especially attractive. Instead of worrying about market crashes, unexpected expenses from owning rental properties or tenants or dog bites, you get the peace of mind that your funds are working steadily, safely, and getting cash distributions every single month without the hassle of actively owning real estate. Who should consider this type of investment? Let's talk about that. Investors looking to diversify beyond stocks and bonds that can fluctuate. Those seeking steady passive income with excellent protection of principal inside their retirement accounts. People who want to reduce their exposure to the stock market and those fluctuations, the volatility. Investors who prefer real estate-backed loans in their investments. Anyone looking for hands-off real estate strategy without being a landlord and dealing with that. If you have a traditional 401k or a traditional IRA that's underperforming or it's too volatile, a self-directed IRA investing in real estate-backed loans could be a smart alternative to grow and preserve your retirement savings. At ZINC, we help guide you through this process. It's pretty simple. Rolling over your existing retirement account into a self-directed IRA, and we'll show you how to invest safely in mortgage funds. We handle underwriting, servicing, and risk management. You simply enjoy the steady, passive, predictable income that these real estate loans produce. If you'd like to learn more, visit zincincomefund.com to learn how you can diversify, protect, and grow your retirement savings the smart way with excellent principal protection. I'm Todd Piggott, managing member of the ZINC Income Fund. Join me today. Thank you.